Phil, man, back again. How you been?
Good man, good, good. A lot going on as always, man. There's been so much going
There is
on
a lot
all
going
like
on.
lately.
We always have to have a debrief before the call, talk NBA, get that out of the
Yeah,
system.
yeah. Make sure we don't blurt it out too much, man, especially with
Yeah.
everything going on now.
Yeah.
The
And
NBA
just
is
for
crazier
context,
than the.
I've gone over the Lakers losing now. I was Lakers in five.
You accepted it? Oh, you accepted it, eh? Yeah, it's
Yeah,
fine. It's my bet's still going good, man. Warriors are still there. We're still climbing. We don't
that's
need
good.
Curry right now.
I hope he does come back, but I'd love to see, that
We
matchup. That'd
need
be
it.
sick. Yeah.
We
And
need
outside
it.
of NBA, man, the Australian market, there's a lot going on as well. Actually,
Mm.
globally, we've got still tariffs haven't yet resolved. There's still a lot of back and forth with the US and China. There's still a lot of tariffs being implemented or things to be seen yet. And
Yeah.
obviously, we've had elections. So we've just seen Labour come out with a landslide victory. I'm not here to talk politics, but here to more discuss, policies from a property
Yeah.
perspective. So
Yeah.
since, we last spoke, haven't seen much change from a tariff perspective. We've seen the markets actually price in multiple rate cuts this year.
Yeah.
And
Yeah.
since the election's now over, we know what's going to be happening for property buyers, especially first home owners looking to
Mm.
get into the market with more open policies for affordability, which we'll touch on. So I'll hand it over to you, man. What have you been seeing from, your clients? What kind of things are they looking to do? Is it buying their own home, building their investment portfolio? Are we still investing? And, what we're seeing from a demand perspective overall.
But what I'm seeing the most of is people are trying to find properties and just not being able to find something that is really a good deal.
Mhm.
And what I've noticed is, especially in the inner west of Sydney and some hubs where the council has actually changed a lot of their rules in terms of how many units they can build
Yeah.
inside one dwelling. And so a lot of these hubs that are getting built, developers are coming in and giving clients big offers, and they're even building it themselves
Mm.
where they're really putting in a lot of units into one place and they're seeing that as more return on their investment instead of trying to buy a property because there's just so much pressure in the rental market right now
Yeah.
and we're not seeing as much supply where it's really easy.
Mhm.
And well, one thing if Labour being elected, and it's a good thing if they actually do it, if they continue on the support for 5% deposits, which they were doing with no LMI, they've even extended the actual values of the homes. Before it was 1 million in Sydney, now it's 1.5 potentially. So
Yeah.
these little changes are going to make a big difference to people buying. But
Mhm.
now what we're going to see is probably that push and pull of now, should we develop what we have already and kind of squash as much as we can? Or do we try to buy big blocks? Because we're seeing people even put two-story granny flats or three, four
Yeah.
bedroom granny flats right now, right?
Mhm.
And especially in the Central Coast and Newcastle region as well, I'm seeing that a lot, where people are starting to try to develop more because trades are becoming a little bit easier to find.
Mhm.
A lot of the trade fr friends that I have, whether that be plumbers, builders, even kitchens and things like that, they're noticing it's a lot more quiet for them. So a
Mm.
lot of that is happening where there's not enough houses being built, and there's kind of like a push-pull between like obviously supply and demand. Do you see that at all in on your side?
It's very interesting you mentioned on the Sydney side of things, looking at development potential and, a lot of cities been rezoned, to your point.
Yeah.
Since from North Sydney into the western suburb locations, we've seen, R4 zoning being implemented, which means you can,
Yeah.
to your point, build multiple stories high, so high-rise apartments potentially as well down the line. And what that means is, and what we've been telling clients ourselves, unless you've got cash in Sydney, it's hard to make money right now
Yeah.
or even expand the portfolio because a lot of the buying being done in more affordable markets, you can get similar growth elsewhere, but have better serviceability with higher yields to help you expand the portfolio. But if you've got cash and you can buy properties above like 900K, you can buy in these locations, to your point, which are being rezoned, where developers can make profits on a big block of land that's, maybe have the potential for high-rise units, apartments, house and granny, whatever it is. And that's where a lot of
Mhm.
the money is in Sydney from, a zoning potential perspective, building multiple dwellings, selling to developers. And we've seen that in the Western Sydney areas for sure. So into Liverpool, into Mount Druitt, a lot of those areas right now, you can find dwellings under $1 million, which after rezoning from a market value perspective could take them up higher by another two, $300,000 for sure. So I think that's very interesting that you mentioned that. So right now, we don't have a lot of clients focusing on that type of market, just purely from a cash flow perspective. Not
Yeah.
a lot of
Yeah.
people are open to developments because of the fact that it can take time. There
Yeah.
are a lot of risks in the future. But
Yes.
Sydney's blue chip, man. So you won't go long holding these properties for a long period of time. If you buy these properties and you're willing to hold them for 5 years, I think because rates are dropping, we will see this supply shortage in Sydney continue to have a strong price floor. So you will see values go up for sure.
Mm.
And just on rates, since the tariffs have not yet been resolved, we're still seeing US try to fight that war with China in terms of an economic war, kind of policy
Yeah,
based war
Cold
there.
War.
So yeah, man. And so what we're seeing right now is if China ultimately is going to slow down in terms of their economy because they largely export to the US and they now can't do that with the high tariffs in place. What
Yeah,
that means is they'll actually import less from Australia. 90% of Australian goods are exported to China. So if China is taking less of Australian goods, ultimately that will lead to our economy slowing down. If our economy slows down, we do have the need for more rate cuts. And that's what the market is pricing in. So the market has priced in an RBA cash rate of around 3% in the next 12 to 18 months. Obviously, what we do is we take that forecast and we understand from a property perspective what markets are most likely to benefit. 100% Sydney is going to be one of them because of the fact it's so unaffordable already and having more cash available is great. But
mm,
honestly, affordable markets where people want to live will really do really well in this type of market. They become even more affordable with more borrowing capacity. And primarily for people looking to grow their portfolios, instead of parking in, your entire deposit or your loan amount from the bank into one property in Sydney, you could potentially buy multiple properties across the country. And that's what we're kind of focusing on from a strategy perspective. But I do think there is still a bit of long-term risk in markets like Sydney or like, higher in Melbourne or Brisbane, because if our economy slows down, despite how much they cut interest rates, economy slowing down means unemployment's rising. It
yeah,
means jobs are hard to get.
yeah,
So think of properties that are more than 1.5 mil today. You need a household income of $300,000 just to hold a property with ease. Not even with
yeah,
ease. I would say to hold the property
yeah,
and
yeah.
kind of, get
Get
through
by.
everything else. So what happens now if, you've got pressure in your job or there might be, risk to your role in the future, you're wanting to downsize, you're not wanting to pay the mortgage, it's too much of a risk for you. So I'm still seeing properties about 1.5 mil before they become, into the luxury market space becoming a massive risk. And that's
Mm.
just to do with what's happening from a global uncertainty point of view. And the last thing I would say is you had touched on the first home buyer scheme. So that's definitely in place. So every city now has an increased price cap.
Yeah,
To your point, Sydney's gone to 1.5 mil from around the 1 mil mark. Melbourne's going to 950K. And what this basically does is once it's implemented in January 2026, what we'll see is first home buyers who were waiting on the sidelines before because they couldn't buy their ideal home to live in now are able to because number one, the property they want to buy and live in probably fits in their budget. It doesn't matter how much they earn anymore. So they could be earning like $5 million a year and they are still eligible for that first home buyer's grant if it's their first property they're buying. So you can
mm,
go in with a 5% deposit, no LMI, no stamp duty, and you can buy their own home. Obviously, we don't recommend that from an investment point of view for a multitude of reasons. But what I think about is these people originally renting are now going to become owner occupiers. So you've got more buyers, more demand coming in, and you've got even more tight rental market as a result of this new scheme. So I've been saying to our clients for a long period of time, you've got rates dropping, supply is getting worse, and you've got a scheme that allows more people on the sideline to come into the market. I think this supply demand kind of dynamic is going to really send prices soaring, in my opinion.
yeah. And I agree with you 100% because there's nothing really that gives us an indication that things are going to change, right?
Yeah.
There's no way that we can say that we're going to get a lot of skilled laborers that are going to be able to build a lot more and a lot
Yeah.
better. And there's also nothing to say that even if we do build these massive estates, that it's able to actually sustain itself and the economy is actually there to actually do it, right? Because
Mhm.
as you said, with everything going on, if a big company pulls out or there's massive layoffs, like we're seeing that already in the US, where there's massive companies that are doing layoffs
Yeah.
because of these tariffs and because of the economy in general. So there's both. Right now, they're struggling and they think they're going to struggle even more. So that only says that it's only going to get tighter and harder. And as you said, if you've kind of put yourself in that $1.5 million mark and you are already kind of feeling the stretch, if something does happen to the economy, kind of where can you go from there? And then from there, it's kind of like a struggle of what you can do.
Yeah.
And the thing is, the tricky tricky thing about Australia, we keep getting called the lucky country.
Yeah.
And that's the thing that makes it really hard is because we really can get lucky again, right? Really depending on what does happen.
Mhm.
Because if, say, best case scenario, the US and Europe kind of negotiate a deal and they start booming, Australia could kind of veer towards the US. And I'm sure even if we do have any tariffs, I'm sure we can have some sort of negotiation with the US where it would profit, right, for Australia.
As long as they
Whereas
stop tariffing the penguins, for sure.
yeah, that's
Yeah.
right. That's right. Or vice versa. What I've seen is that instead of countries sending things to the US like phones, technologies, or whatever,
Yeah.
they're actually distributing it to other markets, and those markets are
Mm.
actually getting cheaper and better products for
Mm.
the same price, right? So that could happen, and maybe we can go from a tech and mining boom and then maybe go towards China, and all these risks that we're talking about aren't really there. And then that, even if that happens in a best case scenario, that only means the supply market is going to be even harder. So
Yeah.
that's why it's really hard to indicate whether it's a good or positive for Australia.
Mhm.
What's really going to happen to make prices more affordable for people, other than finding other avenues where you're going to do a lot of research and finding that investment property and everything is just more competitive.
I love what you mentioned there about, we don't know if it's going to
Yeah,
be great for Australia or negative. We just don't know because no one can predict those things. But what
yeah,
we can always do is leverage what information we do have, especially on things outside of our control, and understand what that might mean for us. So I think to your point, if you're just investing smart in foundational locations where people want to live in, you'll do fine. And
yeah,
it will be great if Australia does benefit, to your point, if we can expand, our economy outside of natural resources and mining, because I think that's one of the main weaknesses. And I'm very concerned in the long term on how we keep growing as an economy because with
yeah.
our population increasing the way it is and very minimal innovation coming out of here, we've got a per capita recession that's going to keep lasting, and we can't keep taking on the same amount of people in the country to keep boosting
Mm.
the economy. So there's a lot of long-term kind of risks to our future, which I'm not going to talk about today, but that would be great if it does help us in a positive impact, positive way.
And a realistic scenario would be that we copy America and we do more
Yeah.
manufacturing in Australia. And do we really want to be doing manufacturing? Is our economy really good and efficient at manufacturing? Are we better at doing services, which traditionally we have been, instead of actually, like for example, Holden is students come here and we make so much money from that. And there's so many other ways. Maybe what we can do is maybe we can focus on, looking at commercial assets. Maybe that's where Australia is kind of going, and we can kind of look that way and maybe potentially plan for that, right? Maybe how am I going to get to that property where maybe I buy something affordable now that's basically covering itself, as you said, whether it's the economy is good or bad. I know that asset is safe. People want to live in that area. And maybe as that grows, I can maybe veer into the commercial route as I get my feet wet and get more experienced in investing as a whole.
Yeah.
So I think it's good to be thinking of these things, right? As you said, we don't know, but we should be planning and at least preparing to know how to react if something like that happens and where can we fit in and cash in on it as well.
Yeah, yeah. You did cut out there for a second, but I got the gist
Oh,
of everything
sorry,
you said
man.
at the end. No, that's fine, man. That's
Okay. Yeah.
fine. And I want to ask you as well. I was looking at the performance year to date, so just 2025. So we've seen a market that's growing, and I think a lot of the market was kind of just waiting. We had the tariff kind of issues come up, then we've had obviously election just happened last week. So I think a lot of the market was still on the sidelines, understanding
Yeah.
when's the right time to get in. Are you still seeing a lot of people hesitant to enter the market given global uncertainty? And if so, are you also seeing them focus on the wrong things in terms of do they want quick growth? Are we seeing them treat properties like stocks, for example? Because I'll
Mm,
get to why I'm asking, but I just want to
mm.
understand from your perspective. What have you
Yeah,
been
yeah.
seeing from a sentiment view?
I think from what I'm seeing now is people are seeing the writing on the wall and saying, hey, we
Hmm.
need to get quicker and we need to get our pre-approvals in and we need to start planning,
Yeah.
right? I still think people are being a little bit choosy in a sense of, oh, I'm not sold on this property, and they are still kind of just lingering on the sideline, as you said.
Mhm.
But I think there is a lot of people that we're not thinking about that are ready and cash either with a bank or cash in hand, ready to buy. And I think we're going to see a big flush, but everyone is kind of just waiting. That's how it kind of feels for me.
I think I definitely agree with that. I've got a lot of clients that we've been having discussions with, and they're not yet ready to pull the trigger. people who do on board want to go as fast as possible because I think they're more
Yeah.
understanding that, like, if I secure the right asset now, it's a great time to buy, very, very,
Yep.
very, very low risk in the right markets. So you'll do fine.
Yep.
But the main reason I'm also asking that question is if you look at the data to understand what cities are performing the best, can you guess what the best city year to date?
I
So
reckon for sure it's Melbourne right now.
it's actually
Is
Darwin.
it? Darwin. Oh, okay.
It's Darwin,
Surprising.
man. So in, in
Why?
our in our industry, we obviously rely on a lot of data.
Mm,
So I want to make it very clear, I'm not against Darwin. I respect the people that live there, but from a pure investment point of view, people just there's not enough population there to get strong metrics, but a lot of people don't actually live in Darwin. So you've got a
mm,
population of maybe 150,000 people. Even from that 150,000 number, a lot of people are fly in, fly out. They're based on
mm,
natural
mm,
gas
mm,
projects. So it kind of, inflates or, gives you a different kind of data set that makes the market seem a lot more affordable. And because there's so few people living there, supply and demand metrics look amazing. So if you look purely at just the data, you're seeing Darwin do close to 5% year to date from a growth
mm.
perspective.
Wow,
And
that's
I
big.
don't think, this is something where it's purely owner-occupied driven. I think a lot of investors or people who are, maybe using a buy agent are going to Darwin. And I don't have an issue if you are in there for the long run, but I do have experience with talking to a lot of people that people are uncertain. So the mindset to treat property like the stock market is kind of coming into place, which I don't agree with,
Mm,
because
mm.
what they're thinking is that with all the uncertainty, you've got great data on Darwin, so they can,
Yeah.
buy, invest there for maybe 12 to 18 months, take profits and move on to the next market. But what I don't understand is that you need to understand the profile of the buyers going in there, because if it's just investors buying those properties, the chances are they have a very similar mindset to you. So
Yes.
essentially, you're kind of being caught up in this Ponzi scheme because you yourself, as an investor, are raising the prices of the
Mm,
assets in Darwin today. And then eventually, you guys will probably have a similar target from a price perspective when you want to get out. So it's not going to
mm,
be easy to get out that price. There's
mm.
also, costs of doing business in property when you buy something. So you've got government taxes like stamp duty, you've got holding costs potentially as well. And then as you exit, you've got selling fees, you've got taxes. So it's
Yeah.
not very clear to say that's going to be a profitable exercise going into a market for 12 to 18 months. And this is not just a Darwin statement. This is overall, if you look at property, I would say this is a market still where we've got record low supply. It's a human requirement. It's a backbone of our economy. You don't need to take a risk. You can
Mm,
buy in foundational locations for a long period of time. To your point with Melbourne, like we're doing a lot of buying in Melbourne right now because that's something we feel that's in the bottom of the property cycle. So you don't need to go to a Darwin to get a great deal, if that makes
yeah.
sense. But yeah, like have you been
And
seeing anyone have that kind of mindset, like a more
to
short
be to your
mindset?
point, honestly, yes,
Yeah,
right? And exactly to your point of people just buying a market that's hot right now,
yeah.
thinking they can just cash in and out. And to be honest, I'm seeing a lot more with, I'm not going to say the suburb, but there was one particular suburb where I felt like every single buyer's agent was just buying there. And I literally got a valuation report from an actual bank saying that that is happening and that they don't trust the actual market at the moment because the genuine buyers there aren't actually living there, right? And they
Can
don't
I ask
actually.
if this is in Townsville?
No, it's regional Queensland. It's regional
Okay, close
Queensland.
enough.
Yeah, different place, but yeah.
Yeah, yeah.
And the thing is, right, it's like I don't want to bag out anyone that's actually bought there, and that area is probably going to do well. But as you said, because everyone is thinking like they can just cash in on that, and they're seeing other people do it, and they're trying to find the right thing, sometimes you lose the essence of the area because just
Mm.
because you bought in a nice neighborhood doesn't mean it's where people want to buy in that neighborhood. Right. And that doesn't mean it works. Right. And what you've seen is a easy example is a lot of suburbs in Sydney where you've seen prices go down 5-10%. Reason being is because it looks good, but when you actually live there and the way the area is actually structured, it's not very livable. So if you're not going to actually want to live there as a local, and that can happen in these remote locations where you're seeing the numbers and they look good and you're looking at it as like a stock when it's actually someone living there and actually someone wants to be there. What if, a big mining company pulls out and that was the only reason why it was expensive? Or what if it's an actual, beachy town that's actually really nice and people like don't even know about it? One side has a really smelly location, there's, a garbage dump there, and the other side has like a beautiful paradise that you don't even know about.
Yeah,
So sometimes you kind of lose what that area is and where you're actually investing. And it shouldn't just be looked at as a Nike stock, Amazon, because
yeah.
it doesn't really work like that.
Yeah, man. Like I love the points you made because regional Queensland, to your point, like we personally not focused there for like the last 8 to 9 months. I don't think to any there's any reason why it shouldn't keep growing because you've just
Yeah,
got amazing fundamentals from the affordability, supply
for
demand.
sure.
But even some locations from affordability is starting to creep up into those caps from a data perspective. But ultimately, it comes down to if your strategy is to hold property and you want to build a sustainable growth portfolio, if you're going to locations that have, risen significantly, you want to minimize the risks. So
Yeah.
if I'm buying a property for a client that's already gone up in value, I'm probably going to do that in a capital city over a regional area, to be honest. Because at least capital city, you've got a lot more government spending, the right projects. If the economy slows down, there's less chances they're going to pull that funding. Whereas in a regional area in Queensland, for example, it might be very driven by mining or one industry. And then if something happens to those kind of companies there, then you have the risk. So
Mm,
that's where we kind of understanding, what's going to work best long term. But
mm,
obviously, clients want the short term growth as well, and that's what we'll always make them aware from a data perspective. This is what we see in the first 3 4 years, but we'll obviously highlight once that growth is done. Are you buying close to market cycle top? And if you
yeah.
are, how do you scale from there?
Yeah.
Because you don't want to basically make your or like formulate a strategy on property investing based on selling
Yeah.
because there's too
Yeah.
many risks when selling.
Yeah.
We will not be able to understand the end net profit today when you're buying simply based on buying and holding. Because if you're doing a development, it's different. It's a numbers based game. This is not for most clients. It's not a development. It's you're actually buying and holding a property, and yeah, there will be risks to that for sure. So that is a very interesting take on what's happening in the market. But
And
I definitely think, man, like yeah, it's not a stock. So please don't
yeah.
treat property like stocks because it won't
And,
work.
and And to your point as well, government projects, like, yes, you should be thinking about them, but a big easy one is the high-speed rail. And I
Yep.
think there are going to be random suburbs and random regions in Australia that are going to boom because of it. But to purely base your whole strategy on that speculation and, trying to map out where you think will go, it's good to think about, but to completely base it on that and thinking, okay, let me just buy and wait for people to actually announce that it's happening and then get out of the market,
Yep.
as you said, you could potentially get stuck, or the whole project could just get completely thrown out, or there could be something that's even more effective and even a better way to travel that we
Yep.
didn't think of and do as well.
Yeah. Never invest in just one indicator.
Yeah,
Use multiple factors, keep stacking the odds to give you the best probability to get the right result. That's
yeah,
ultimately what you should be trying to do, in
yeah.
our opinion. Yeah. So what are your kind of I would say predictions rest of the year and moving forward to 26?
Well, the most extreme example is I've
Yeah.
heard 1.5% cut within a year. I
Oh,
think
okay.
that's really, really high. I think we'll definitely get over one within the
Yeah.
next 12 months in
Mhm.
total. I've also heard, 0.5% upfront in this May one. I do think it's going to be a cut, but I think 0.5 might be a bit too much. I
Yep.
don't think the economy really needs that right now.
I think if the
Um,
stock market kept declining the way it was like a month ago,
yes,
we could have got a point 0.5.
agreed.
It's
Yeah,
kind of stabilized. I will call this a bear market rather than the stock market personally.
yeah.
I think the markets are pretty much top, but I think because they're more stable at the moment, we won't be seeing that extreme double rate cut in May.
I mean, you've seen the casino lately. It doesn't make sense, right? Tesla
Yeah,
lost 70% of their sales and they didn't stop rising. So
yeah,
at the end
yeah.
of the day, sometimes it can be a bit of a casino as well. But in saying that, what I'm seeing from a banking perspective, banks are being super aggressive on their rates and they're all expecting big cuts. We're
Yep.
seeing banks without even negotiating offering 5.7% on some properties as well. And
Right.
that's variable, right? Which is
Very
really,
aggressive.
really crazy right now, right? The only thing is we're noticing that some banks are being a bit slower to respond because we're seeing a lot more changing happening in the market. But I'm only expecting that to get more and more better from the banking side because I
Yep.
think the market is going to start picking up more and more as well.
Yep. What's your pick for top performing city over the next 12 months?
I think, well, if it's just going to be purely numbers, maybe just Darwin, just based on what you said,
Yeah.
right? Just based on what you said, I think it can still maybe hold on just because it's the cheapest, right?
I think the way it's going now will definitely win that title.
Yeah, yeah.
Yeah.
But if I'm saying for myself, what I would
Yeah.
probably buy in right now, I would probably buy in either, if not Melbourne, regional Victoria somewhere.
There you
That's
go.
where I'm kind of thinking about
Yeah.
the most.
And do you have a hot take, Phil? Do you have a hot take?
A hot
Anything a
take,
bit
man. Put me on the
controversial?
spot. There, put me on the spot. A hot take. I think my hot take is I think Victoria. is going to become a massive, massive populace, right? And all these re random regional towns like Bendigo, Ballarat, I think they're all going to be mini cities that people are going to love to be in and love to be proud of to actually stay in. Because I don't know if it's just a Victoria thing, but I think they're a lot more patriotic about where they live when you compare them to other places. I feel like someone from Sydney, Brisbane, or Perth would kind of leave either city and not kind of think as much about it compared to someone from Melbourne. I don't know if that's just me. But I think that's probably like my hottest take is that that can just keep happening.
I love that hot take, man. I love it. And I don't even think that's hot because maybe we've been buying in some of the locations you just mentioned.
Yeah,
So who
yeah,
knows? Yeah, no, but we're,
maybe.
we're actually very bullish in Victoria. So I think a lot of our viewers know and Melbourne Metro, strong regional locations, Bendigo, Shepparton, Ballarat, to your point. These are locations with a large population. Then they're very independent, self-sufficient
Yep,
cities. They'll go and do
yep,
really well. To
yep.
give clients an understanding or the viewers an understanding, Newcastle's median price point is nearly $2 million today.
Yeah,
So where do you think these properties can go eventually down the line in a very similar economy?
100%.
Good math.
100%. Yep,
Awesome,
100%.
man. You know, I
Yeah.
think from a hot take perspective, I was going to say that I think Darwin will outperform the next 2 years the way it's going. I personally think that because if rates keep dropping, those properties are still very affordable, and I
Yep.
think people will keep piling in. But I think in the next 3 to 4 years, there'll be mass exodus in Darwin for sure. And
Mm.
not enough people are talking about what that means for someone's
What
property
makes you
portfolio
say
long
that?
term. Because I think
What
a
makes
lot of the people are going, a lot of the investors there today are buying for 12 to 18 months of growth.
mm.
I think they know, and I've seen there's videos on YouTube right now that's literally saying that, hey, you want to get quick growth, you buy in Darwin, you sell, you go somewhere else. So
Mm.
if they're gonna if these investors are gonna sell at the same time because everyone's having the same price target, a lot of stock comes on the market, and when stock comes on the market and people are trying to get the best price, someone will cave. They'll
Yeah,
accept an offer that's lower because they need to get out
yeah,
of the market now, and then it will
yeah,
just come crumbling down. I'm not saying you'll lose money, but it's not going to be something where you're going to hold the property down and sleep easy at night in that situation. So yeah, I think just be careful on short-term holds in property, and I keep stressing that just because we're seeing the data today and it's just worrying me because I keep seeing Darwin top performer, and it's just a bit like you've got Victoria, man. Like if you want to get bottom of the market cycle instead of Darwin, you've got Victoria to your point. So I think that will just do a lot better.
And I think it's more of an artificial opinion. I think there's a certain point in Australia where it gets too humid. And I
Yeah.
think anything south of that is where
Yeah.
you really want to live, right? It gets to a certain point past Sunshine Coast where it's like, okay, it's a bit too humid to be here, you know?
Yeah.
And it's not as
100%.
enjoyable.
Yeah, like there's humans elements to this.
Yeah,
There's a very distinct requirement of what we need as an environment to live in, like in peace. So
yeah,
we don't need to go into locations which are so far away from everything else and might not have the job opportunities for a family. So yeah, just kind of use property as in a way to think about where do people want to live, and ultimately you will do fine
yeah,
as a whole.
yeah.
Yeah,
And where do we
yeah,
want to live? By the beach. That's simple and easy. By the
exactly.
water, something easy.
Exactly, man. Yeah. But I generally do agree with everything else you said. Like, I think from rate cut perspective, we're definitely going to see another 100 basis points lower next 12 to 18 months. So if you look at the last cycles in history of the rate cut cycles, from the first rate cut onwards, the property market's always gone up by at least 10% over the next 2 years. So you do have an opportunity right now where all the fundamentals are great to keep buying. And again,
Mm.
I'm not just blindly saying buy anything, buy in the right locations, buy in Darwin if you want to, but there are better markets out there in my opinion. But obviously, always look at your strategy. It's going to be different for everyone else. But yeah, you buy in affordable markets where people want to live in, I don't think you'll go wrong.
100%, man. Can't go wrong. You do the
Yeah.
fundamentals right, and that's all you can hope for.
Fundamentals, that's what we'll take out from today.
NBA quote.
Yeah. The big fundamental.
Yeah. Oh
All
man,
right,
it's good to
man.
speak to you, man. It was good to see you, man. Catch
100%.
up.
Yeah, I think we yeah, hopefully had some more golden nuggets for the viewers. So I appreciate that, man. We'll speak next
And
time.
for sure, man. See you
Enjoy.
later.